What if your US dollars were completely digital and issued directly by the Federal Reserve? No banks, no Venmo, just direct to consumer dollars from the government. The Fed has just published a deep dive paper exploring this possibility, and today we're breaking it down. Could this mean faster payments, better access, or more surveillance? Let's explore. As I stated in my previous videos, in order for us to understand where this world is headed, we have to go back and look at the past. The past is often a tipping point for where the future is headed. In January of 2022, the Federal Reserve released a discussion paper titled Money and Payments, the US Dollar in the Age of Digital Transformation. The goal to open public conversation about whether the US should issue a central bank digital currency, or CBDC for short. What is a CBDC? Most of our money today is already digital, but it's held in commercial bank accounts. A CBDC would be different. It would be a digital dollar backed directly by the Fed. Think of it like digital cash. Universally accepted, but issued by the central banks, not Chase or Bank of America. Why is the Fed considering a CBDC? Other countries, like China, are already piloting their own digital currencies. And in the US, demand for faster payments and financial inclusion is growing. The Fed says a CBDC could help modernize our payment system, improve cross border payments and transfers, and even support people without traditional bank access.
In your bank account. The Federal Reserve announcing it has gone live with its new FedNow instant payment system, a system that should allow households and businesses to send payments and receive money immediately without those troubling 3-day holds on checks and waiting for payments to clear in the sender's account and waiting for the bank to open on Monday or after a holiday. The FedNow system is an instant payment system. It's available 24/7, 365 days a year. To begin with, 35 banks and 16 service providers have already signed up. Those banks include things like JP Morgan and Wells Fargo, as well as smaller credit unions and other banks. Unclear if the banks are going to charge for this instant payment. They are charged, but they may or may not pass that along to consumers. Fed Chair Jay Powell saying in a press release, over time, as more banks choose to use this tool, the benefits to individuals and businesses will include enabling a person to immediately receive a paycheck or a company to instantly access funds when an invoice is paid. This doesn't eliminate the PayPals and the Venmos of the world or Zelle. Theoretically, they could use the FedNow system, which is a bank-to-bank system, to send payments, but it's unclear, guys, if those services now face a new challenge from banks of all sizes that can offer similar services.
According to the Fed, a US digital dollar could bring some big benefits: faster and cheaper payments, more inclusive access to the financial system, a reliable digital alternative to cash, stronger US dollar leadership in global finance. But the Fed also outlines major risks. For example, banks currently rely in large part on deposits to fund their loans. A widely available CBDC would serve as a closed, or in the case of an interest bearing CBDC, near perfect substitute for commercial bank money. This substitution effect could reduce the aggregate amount of deposits in the banking system, which could in turn increase bank funding expenses and reduce credit availability or raise credit costs for households and businesses. Similarly, an interest bearing CBDC could result in a shift away from other low risk assets such as shares in money market mutual funds, treasury bills, and other short term instruments. A shift away from these other low risk assets could reduce credit availability or raise credit costs for businesses and government. These concerns could potentially be mitigated by CBDC design choices. A non interest bearing CBDC, for example, could be less attractive as a substitute for commercial bank money. In addition, a central bank might limit the amount of CBDC an end user could hold. Safety and stability of the financial system is also a risk. Because central banks is the safest form of money, a widely accessible CBDC would be particularly attractive to risk averse users, especially during times of stress in the financial system. The ability to quickly convert other forms of money, including deposits at commercial banks, into CBDCs could make runs on financial firms more likely or more severe. Traditional measures such as prudential supervision, government deposit insurance, and access to central bank liquidity may be insignificant to stave off large outflows of commercial bank deposits into CBDC in the event of a financial panic. And the government might face new cybersecurity threats. What the Fed is asking the public. The Fed isn't making a decision yet. They're still asking for feedback. They posed 22 questions to the public. Should a CBDC be anonymous? Should it earn interest? Should it be accessible offline? Your opinion could shape the future of the dollar. Where things stand now. 2025 update. Since 2022, the Fed has launched FedNow for instant payments, but no CBDC yet. The digital dollar is still under exploration. Other countries are moving forward, and the U.S. is watching carefully. If a digital dollar comes, it will reshape how we pay, save, and spend. So what do you think? Are you ready for the future of money? Is a digital dollar a good idea or too much federal control? Drop your thoughts in the comments, and don't forget to like, subscribe, and ring the bell for more deep dives into tech, money, and the future. Peace.
Into something a lot of people are ignoring. Governments are not rejecting crypto. They're building their own versions of it. You've probably heard about CBDCs, central bank digital currencies. But what are they really? Are they crypto? Are they good or bad? And why are over 130 countries now testing them? Let's break it down. So, what exactly is a CBDC? CBDCs are digital currencies issued by a central bank, like the digital version of cash. But unlike Bitcoin or XRP, they're not decentralized. They're built on blockchain-inspired tech, but fully controlled by governments. Think of it this way. If Bitcoin is like the open internet, then CBDCs are more like a private government-controlled app. They can be programmable, traceable, and even expire, features that cash doesn't have. Now, here's the big question. Why are governments doing this? Well, a few reasons. Faster, cheaper payments, especially across borders. More financial control. It's easier to track money and prevent crime. Response to crypto CBDCs are a way to stay relevant while keeping control. China's already leading with the digital yuan, testing it in 200-plus scenarios, even at the Olympics. Meanwhile, the U.S. is exploring a digital dollar, and the EU is piloting the digital euro. This isn't theory, it's already happening. So, are CBDCs the same as crypto? Not really. Features CBDC as crypto like Bitcoin XRP controlled by? Government decentralized, transparent? Limited fully public or permission supply? Unlimited often capped can be censored? Yes, much harder CBDCs offer convenience, but they come with trade-offs, especially around privacy and freedom. That's why many crypto supporters are cautious. Let's talk adoption. Bahamas launched the Sand Dollar back in 2020, the world's first CBDC. Nigeria has the Naira, but it's facing challenges with user trust. And in the UK, the Bank of England is building the foundation for what's being called Bitcoin. Even Ripple has been tapped to help pilot CBDCs in Palau, Bhutan, and others, showing that the line between traditional and crypto tech is blurring fast. So what's the takeaway? CBDCs are here, and they're growing fast. They are not crypto in the pure sense, but they are built on similar foundations. And as governments move in, it raises new questions about control, freedom, and the future of money.